Welcome to Financial Strategies with Andrew and Daniel Adjemi, powered by the Retirement Income Store and brought to you by Adjemi Financial Strategies in Guilford, Connecticut and Denver, Colorado.
So Daniel, as we do and talk with and educate a lot of people in regard to how to retire and how to stay retired. And recently we did a webinar on Roth IRAs and how they work and conversion and that kind of thing. And so as a result of that, I got a bunch of new people to start talking to. And I was talking to, this one gentleman, we'll call him Jeremy. And, Jeremy, from that standpoint, wants to retire. And currently he's using this firm that has retirement in its name, Acme Retirement Group or whatever, right? And or ABC Retirement Group, and he's using them. He sees his account has gone down 25%, and he's questioning whether or not to retire. And he came to me and wanted a second opinion as a result of this webinar that we did. And I looked at his finances and talked to him about his finances and realized that, his dividends and interest on that account are being eaten up by the fees from this so-called retirement company. And it's like, why is it, Jeremy, that this retirement company can't put you in a good place to retire right now, that your assets are down, that now if you actually retire and you don't have dividends and interest because they're taking all the dividends and interest in their fees, you would have to take from your principal. And taking from your principal at this point, when you're down 25%, is cannibalizing your assets. That's the number one mistake that retirees make with their money, is taking from principal, not switching their money from a growth mentality to an income mentality, a strategy, distribution strategy at the proper time. And so they end up running out of money. And so it's just egregious that these companies that, whether it's the 401k company that's retirement oriented, or it's somebody that you're actually paying as an advisor for retirement, that they're not able to get you into retirement or keep you into retirement for the rest of your life without running out of money. I'm Andrew Adjemi.
And I'm Daniel Adjemi, and you're listening to Financial Strategies. Today, we're talking about, can I still retire? That your story there is great, because a lot of people are wondering, they've worked, and now they want to know what's next. Can I retire? Do I have to work a few more years? I think the NASDAQ's down about 30% year to date. S&P's down about 20% year to date. So, ouch. So most people's monies are in their 401ks or in retirement accounts that are in some kind of fund. And so they're somewhere around 20 to 30% down. And a lot of people want to know, can I retire?
Yeah.
So what did you tell Jeremy there? And you're starting on your fourth decade in the business. Well,
right.
Let's talk about let's have some real talk here. Some real talk.
Real world knowledge.
What do people who they can taste retirement, they're in retirement, they're right there. What do they need to know about retiring in, technically we're not in a recession, but it's right on that board. What do they need to know?
Yeah. Well, first thing that comes to my mind when you're saying this, Daniel, is what happened in 2002, 2008, right? When that's exactly, at those times, people who were ready to retire either couldn't retire or had to go back to work or had to change their lifestyle because of what happened with their money. And that's what I alluded to, at the beginning of this segment in regard to how people don't, the number one mistake that retirees make is not moving their money from, the accumulation and building up column strategy to a distribution strategy at a proper time. Well, you should start looking at that, thinking about that 5 to 10 years before you're ready to retire. And if you do, hey, you got nothing to worry about, right? I mean, we got plenty of people here that are stress-free and not having anything to worry about, and they're retiring every day and they're loving it. And I'm love talking to them about how they've got a double-digit increase in their retirement income. And the market's down 20%, but if they're down 3 to 5%. So not a big deal. Why? Because we've got them prepared for retirement. So 2002, 2008, we had the same thing. That's what's happening now. But people forget history, right? One thing we know about history is that history repeats itself. And if you don't know history, you're doomed to repeat it. And I know history. I've been in it, it started my 4th decade. So, and that's what you're asking for, Daniel, is real world knowledge, right? Well, these are some of the things that's happened in the past, and people have short memories. Right now, people's memories go back maybe 3 to 5 years. The stock market, in the past 3 to 5 years has done nothing but go up. So they think it's going to turn around and go back up. But what they don't realize, and what people don't know that they don't know, is that because people who are getting ready for retire today, back in 2007, when the market did this exact same thing, they weren't concerned about it because they were working. They were still putting money away, and they actually benefited from what's going on. But people who are close or in retirement today are going to be hurt by what's going on. And unless they make a move now, it's just going to get worse. So, and that's what today's show is going to be about, Daniel, is more, what this looks like and how we can address this. But, if you just joined us, you're listening to Financial Strategies with Andrew and Daniel Adjemi, because people don't know what people don't know. And we're all about educating you. We want to add value to your life and educate you. And we know that if we help enough people do that, we're going to be taken care of. So we're about education and helping you to make progress. And because of that, we have a paper that we put together for you today to help educate you. This paper is to know the kind of person to look for when you're looking for a retirement income specialist, and how to evaluate your financial people to see if they're retirement specialists. A lot of you out there, I talked to a lady the other day that she said, my spouse has helped me a little bit with my accounts, but now I don't want to depend upon him because he's an ex-spouse, and all my money, I don't have anybody advising me or helping me with this. But, going into retirement the way she is, she needs help. And the question is, if you have an advisor or need an advisor, it's one thing. The question is, how much are they charging? And that's one of the things that this is going to say is, look what they're charging. We got this thing, it's called 10 signs that you're working with a true retirement income specialist. We'd love to put that in your hand. Call 800-725-7616 to get your free copy. No obligation. 800-725-7616. You listen to Financial Strategies with Andrew and Daniel Adjemi, because people don't know what they don't know. Daniel, it looked like you were going to say something, so I want to. Well,
I was thinking about that paper that we put together that check marks 10 things you need to know about a true income specialist, right? And thinking about, people spend more time researching their washer machine than they do an advisor. And could you imagine, right? Your life depends. Basically, you've traded your time to build up these assets, and then you're going to live off of them. And the ideal retirement, right? Retirement is about lifestyle. You worked hard your whole life to save up this money, and now it's about lifestyle. Right. Could you imagine being a novice and trying to sail around the world on a sailboat, but not researching the guide to make sure that the person taking you on the sailboat had done it before, going to a safari in Africa and looking at lions and and somebody's never done it before. They've never gone there before. How are you going to feel about that kind of thing? And that's why that paper's, I was just thinking about that. Why that paper is so important. So you can go through, check those boxes off, and make sure that who you have helping you is doing these things. If you're close to retirement, it's a big deal. You get most people get one shot at it, and you don't want to mess that one shot up.
Right, exactly. And we don't want you to have to be retired from retiring and have to go back to work unless you want to. That's one thing, if you want to, but we don't want you to have to, because of you didn't plan well, you didn't work well with your investments,
or you got bad advice, right?
Right. And it's not that they're bad people.
Nope.
They don't know what they don't know. It scares me what I hear financial people saying out there and the rhetoric that they're going. And like I said, the financial person that's been in the business for 20 years that I had to explain the difference between individual bonds versus bond funds. And he had no clue that there was a difference between the two. And there's a huge difference. If you listen to our show before, there's a huge difference, and we have white papers on that, and we have and show on that and whatnot. But retirement is about your quality of life, and we want you to have a good quality of life. We want you to spend your money. We want you to feel like you can spend your money. We want you to live off the interest and dividends so that you can keep the principal to keep you in your home the rest of your life. If you have to dig into that when you're 80 or 90 years old, that's another thing. We don't want you to have to dig into principal now. And right now, people are digging into their principal if they want to retire or whatnot. At least that's what we're finding with most people, the way they have their money set up right now.
Well, if we look back at the story with Jeremy, because I think that's a great example, and we look, let's say it's $1 million and it's down 25%. So $750,000, and the income is just covering the fees. So what do? You can continue, you need $5,000 a month. You can continue to take $5,000 out of the account.
Right.
Cannibalize your money, and it most likely won't get back. So we say over long periods of time, markets always come back. Over periods of time, you hear this all the time. Markets always come back over time. Well, yeah. So over time, are you going to put your lifestyle on hold, or over time are you going to draw down while your accounts are down? And that's really what we're passionate about. See, I'm wearing all black today because I'm in mourning for the people who haven't made this change, or who their advisors don't understand this, and they just say that same mantra. Over time, markets always come back. But when you're at the end of the game, you don't care about over time. You care about right now, right? You care about your lifestyle. Right. I want to go on this trip. I want to take care of the grant. I don't want to put it on hold for another 6 years, 10 years. Why?
Right. Yeah, exactly. You've got the point. And that's what we're trying to address today. Can I retire? Can I still retire? Well, you have to look at your assets from a different angle, and you have to do things in the right fashion. And as long as you do, it scares me out there, like what you're talking about, Daniel. You're in it for the long run. Well, Jeremy has, he has no long run. The long run's behind him. It's not in front of him. The long run that they have of being in the market is for companies, because companies go in perpetuity and they continue. They have the long run, but individuals don't. Individuals have life expectancy. So you can't listen to that rhetoric, or you can listen, but don't follow it, please. Who's going to benefit from that is Wall Street. Who's going to lose out from that is you. Well, if you just joined us, you're listening to Financial Strategies with Andrew and Daniel Edgemy. We need to take a break. Today's topic is, can I still retire? The market's down, S&P 20%, NASDAQ 30% negative. Can I still retire? Well, it's dependent upon your strategy. What is your strategy from here on out? Some people say, it's too late to change my strategy. No, it isn't. So we have a book that we'd like to put in your hand to be able to help you and educate you further to be able to make smart decisions. A retirement income story book by our friend David Scranton. David's taken time to put this book into easy to understand language. It's only about 200 pages, easy read, and you'll be able to take this and get some clues about those things that you don't know, so that you can at least ask the questions that you need to ask. And people might say to us, you always are teasing us. No, we're talking about live off of dividends and interest, not off of hope, not off of growth, because growth is not a retirement plan. Hope is not a retirement plan. Dividends and interest are. So you can have this book for free by calling 800-725-7616. Call now.
I'm David Scranton, founder of the Retirement Income Store. If you're in or near retirement, Are you certain you have the right retirement plan in place? Do you want to help ensure your nest egg will last you all throughout retirement? Take our retirement review quiz and find out in 5 minutes or less if you're doing everything you can to achieve a more successful retirement.
Visit us online at agemy.com. That's AGEMY.com. Welcome back to Financial Strategies with Andrew Adjemy in Connecticut and Daniel Adjemy in Colorado.
Triple I was talking to a good friend the other day who works for one of the largest, tech companies out there. And he's telling me how they changed his pay structure. It used to be he had this base and then he got a bonus on top of it. And nobody liked that anymore because everybody pay everything, all bills are, I have this payment, I have this payment, I have this payment. So people can't count on, they need the money. So if you say to somebody, we're going to give you all the money you need, plus this big bonus, people are all about that. But nobody wants to say, well, I'm going to take this pay. And then, if the company does good, if the economy does good, you'll get more money. No one wants to do that in the regular job, right?
Right.
This whole company changed the entire structure of the company to give people more money, and they removed the bonuses because that's what people wanted. But somehow people don't look at that when they think about investing or their retirements. I'm Daniel Adjemy.
And I'm Andrew Adjemy. And you're listening to Financial Strategies with Andrew and Daniel Adjemy, because people don't know what people don't know. Today's topic, can I still retire? Market's down 20, 30%. Can I still retire? Well, we're aiming to answer that today. And that's our goal. So, Daniel, that is crazy how that happened. I mean, I understand that whole concept, right? I mean, how many people would do what Elon Musk did, right? And what was it, $400 million that he got from selling one company, and he invested it all into two other companies that had a 50% chance of growing. He slept on his friend's couch, right? While he was worth $400 million. And, and today is paying off. And if he's not the richest man in the world, he's close to it, right? So that is truly a hope mindset and the mindset that paid off for Elon. But how many people could do that, would do that? Most people say, no, I need a paycheck. I need a guaranteed paycheck. But when it comes to retirement, they don't look at it in that fashion. They don't look at their investments in that fashion. They say, oh, I'm going to put all my investments in hope. And I hope they're going to be okay. But, there's a lot of people in our listening audience.
Tell us why that's hope. Because if markets go up over time, why is that hope? Let's just bring it down a little bit.
Okay. All right. So it's a great way to describe that comes to my mind is, going to the casino. And you go to the casino, we got some casinos out here in Connecticut. Most now, they're all around the country now. You go in, you take the $100 in, and you lay it down on a particular table. And, they tell you, well, the odds are, you could make, $10, maybe $20, 10, 20% on this thing, but you could lose $30, $40 on this bet. Now, the reward is not worth the risk in that case. You're hoping to make $120, to make the $10 or $20. And if you make $10 or $20, that's not bad. That's 10%, 20%, right? But the chances of losing are there as well. So, what happens with the stock market? When people invest in the stock market, it's pure hope. It's that same kind of thing, because the market goes, in order to make money, it goes from $10 a share, $11 a share, $13, $14, $15 a share. The problem with that's growth. The problem with growth is that it can turn into an L and go from $15 a share to 14 to 12 to 10 to 9 to 8 to 7, right? And you can lose money. You hope it's not going to lose money, but come on, if you're going to go camping or whatever, or in a survival situation, you hope for the best, but you plan for the worst. But most people out there, when it comes to retirement, because they've been all their life, they've been planning for the best and hoping for the best. And when it comes to retirement, they do the exact same thing. But it's time to switch strategies and stop hoping for the best and planning for the best, but hope for the best, plan for the worst. And so if you can make some money, well, fine. But if you got that solid foundation in there to be able to give you that what you need to guarantees the promises, that's a whole nother thing. So you hope that it grows, but the problem with hope is it could go the other direction.
So when valuations are still, even though markets have come down, valuations are still, like if you look at Warren Buffett indicators and whatnot, they're still just off the chart. So that's like where you're saying you have the casino analogy where you put your money in there, you want a much higher odds that you could win that. You can't say, well, I'm going to lose all my money or I'll make $5. That doesn't make any sense, right?
Right.
So with markets as crazy priced as they are, consumer sentiment or consumer confidence, lowest since they've been recording it, right? People are having a difficult time out there, and rates going up, which means corporations are going to have to pay more money in order to service the debt that they've taken on when rates were cheap. So you have all these things that are talking about bringing earnings for corporations down while they're at ridiculous valuations. That's why you're saying, especially now, that's hope, because Excel or Python has tricked our brains, because now we use averages. The average, Excel, we put it in and we have an average. Well, it's averaged 8%. But what about the years it goes down 40%? Right? We go from extreme to extreme. We go extreme optimism and then we go to extreme pessimism.
Yeah.
It's only in an Excel spreadsheet where there's an average. You're not living in the average, right? But you can calm that out to an average by changing the way you invest, right? Where you get a solid income stream instead of the ups and the downs of hoping that your stocks are going to go up. Right.
Exactly. Hope can be part of it, but not the only part. I mean, here's the idea. I just want to do the identifier here before, and then I'll try to come back to the 90-10 kind of deal, Daniel. But if you're listening to Financial Strategies with Andrew Daniel Adjemi, because people don't know what people don't know. We want to educate you to be able to at least know what questions to ask so that you too can know and have stress relief for your retirement. Today's topic is, can I still retire even though the market's down 20, 30%? Well, the short answer is yes, if you have the right strategy. Problem is, most people don't. We like to give you a paper that will educate you on this to see if your financial advisor, or if you're your own financial advisor yourself, has the right things involved to actually get you where you need to be, to actually help you to retire, stay retired, and have enough money to live the rest of your life. It's called 10 Signs that you're working with a true retirement income specialist. So just call it by 10 Signs. Call us at 800-725-7616 and ask for 10 Signs. And we'll be glad to get that out to you. No obligation, free of charge. Today's topic, can I still retire? Daniel, what I was wanting to say there was that so many times when I'm doing these, like I talked about earlier, these free second opinions or financial MRIs on people's portfolios, one of the things I ask people as they approach retirement or in retirement, are you a conservative investor or aggressive investor? Most of them say, well, I used to be aggressive, but now I'm more conservative, or maybe I'm moderate, but they're still more conservative today than they are, because they realize inherently that the past is behind, that the long run is behind them, not in front of them. So they get that, but they don't always equate the two, right? And then I say, well, how much do you think of your money? What percentage of your money do you think should be in the stock market at risk in a hope standpoint? And they say, 10%, as opposed to universal options of dividend income paying investments. They say 10%. Then I look at their investments, and you know what I find, right, Daniel? That's why you're smiling, because you know what I find.
It's backwards.
It's backwards. They got 90% at risk and 10% that's kind of safe and moving ahead. And they say, but my financial person said that I'm conservative. He knows I'm conservative, and Why do you say that 90% is risk? Because he says I'm in conservative stuff. I said, well, it's a different definition. His definition of conservative is different than your definition. He's got you in a hope mindset for that conservative, and it's at risk where sure you can make money, but you can lose money. And where things are in the market now, it looks identical to 2007 when the market came down, would go back up, go sideways a little bit, come down further, go back up a little bit, go sideways a little bit, come back down further. And it did that for several months until the bottom just fell out. And I hope that you and our listening audience will take heed to what we're saying, exercise wisdom, and make some changes before you get to that bottom the way so many people did in December of 2008 and March of 2009.
Yeah, and the cool thing is we were talking about that tech company that changed the way that they paid their employees, right? Mm-hmm. And you, as the CEO of your financial retirement, mm-hmm. you get to choose how you want to get paid. So you could say, that's well, right. I want that base of $100,000, but I don't want to get rid of the bonus. Once I get my base of $100,000, I want to use the rest of the money to, as a bonus, as a growth, but at the right time when it makes sense to go aggressive, not when stuff's at all-time high, right? But that's the really cool thing about the custom strategies in a retirement plan compared to just, the cookie cutter thing that everybody rolls out that we're usually looking at on those second opinions because it's easy. Right. Like the way that our world is set up now is to make things simple, fast, simple, fast, right. Simple, fast, simple. But that's not what retirement's got to be durable. It's got to be strong. It's got to be robust, right? So that it can weather through.
That's right. Yeah. That's right. Preach it. That's right. That's right. And kind of what I'm chomping at the bit to say is I was talking with a stock market, Wall Street oriented advisor yesterday. And I was showing them what we do and how we do things and how much difference it is than Wall Street's model. And he said, how many portfolio models do you have? I said, we don't have portfolio models. You see, because a lot of these Wall Street firms, they have 1, 2, 3, 4, 5, or A, B, C, D, E, F, G, and they give you this test and they say, oh, according to this test, you should be in model E. And we're going to invest your money according to model E. Well, we think people are individuals and that they need to have it customized to them. And I said to him, no, this is customized to this person. I showed him a sample of one of our clients and I said, this is customized to this person. And his jaw dropped. How can you do that? How often do you look at this? I said, daily. Because we have systems to be able to do that, so there's ways that you can do that. So today's topic on I get the name of our company and the show mixed up here. On financial strategies with Andrew and Daniel Adjemi, right? Today's topic is, can I still retire? And the short answer is yes, but you have to have the right strategy. If you go with the strategy that 401k plans push, or most professional a non-true retirement income specialist push, well, that's the wrong strategy. And chances are you've lost somewhere between 10 and 20% in your total portfolio, which is egregious. But the good news is it can change. Folks in our listening audience here, recently, somebody had one of our newest clients had lost about 20% in their portfolio, their $3 million portfolio, and as a result of that,
before they came over to us, but we're going to be able to get them $150,000 a year from that, even though they've lost that. Why? Because we know what we're doing and we're taking advantage of the opportunities that are out there, and we can get them $150,000 a year of promised and or guaranteed income to be able to last the rest of their life. So there are things that can be done, but you need the right person who has the right tools in their toolbox. Well, with that, we're going to have to take a break here, and we want to give you this book, Retirement Income Story by David Scranton. This is going to
tell you some of the things, some of the tools that the people that you need in your toolbox, or if you're advising yourself, or if you have a financial advisor, the tools that they need to be able to help you retire, stay retired, and live the rest of your life. Because at some point in your life, I don't know anybody who has on their bucket list, I want to live my life and then go in a convalescent home. You want to stay in your home as long as you can. And that's what this is all geared toward, making sure that you don't outlive your money. You can have this book for free by calling 800-725-7616, or check us out on the web, agemy.com, agemy.com, the two words agemy.com, and you can contact us through that. 800-725-7616. We'll be right back after this.
History tells us the market goes up and the market goes down. What would you do if you lost half of your retirement savings? It's time to make the shift to steady, reliable retirement income. And where do you go? The Retirement Income Store. Log on to agemy.com for your free retirement review. That's agemy.com. The Retirement Income Store, where retirees go for income.
Welcome back to Financial Strategies with Andrew Adjemy in Connecticut and Daniel Adjemy in Colorado.
So Daniel, my friend, as you well know, lives in the Midwest, one of my friends, and he uses this analogy to help people to understand what retirement is like and investing monies. And that would be, out in the Midwest, there's a lot of farmers, and farmers are all about their crops, because their crops represent their lifestyle. The more crops they have, the more money that they can make, and thus their lifestyle can be better. And that's what it's all about to farmers, is their crops. And the more crops you can have, the better crop, the more crops that you have, the more that you make from those crops. Well, one of the things that they do with their crops is take some of those crops and the money from those crops, and they want to buy more land, because they know if they buy more land, they'll get more crops. And if they get more crops, they'll get more money and be able to increase their lifestyle, right? It's basic math, kind of, right? And so with that, they're not concerned. Well, they're concerned about the price of the land. When the prices of land goes up, they're more concerned about that. But because it means that they're going to buy less land and be able to put up less crops. And if the price of the land goes down, they love that, because they're going to be all over that, because when they buy more, they can buy more land with the same amount of money, and thus they can get more crops so that they can increase even more. And they're all about the crops rather than more than the value of the land, because if they're just holding their land land price can go up, the land price can go down, but all that matters is what kind of crops is it producing. I'm Andrew Adjemy.
And I'm Daniel Adjemy, and you're listening to Financial Strategies. Today, we're talking about, can I still retire? With all the craziness going on in the world, markets down, inflation high, consumer confidence at an all-time low. What, am I still able to retire? Do I need to put it on hold? What do I do? I think that analogy you just gave about the farmers is fantastic, and it makes a lot of sense. You using your income to buy more land, you're using your crops to buy more land as the prices come down, because it gets you more, and then you have more income.
Right.
And then you can get more, and it just compounds and it grows and it grows, but it's a certain way. Could you imagine if somebody was like, well, my land keeps going up, so I'm going to stop investing crops. That's pretty hard. And I'm just going to grow enough crops to pay the tax on my property. So as long as I have enough crops to pay the taxes on my property, we'll be good. And then land always goes up. Yeah. So I'll just sell a piece of land every time I need money to support my lifestyle. But somehow that's what we do with investments.
Right. And eventually you run out of land. Right. And then you can't support your lifestyle. It's crazy. You're exactly right.
You don't live in an Excel spreadsheet averaging it out.
Right. And and the beautiful thing, like, what you just said about, buying that, the crops and buying it and buying more. That's what I was referring to at the close of the last segment with our client, where she can get $150,000 a year from her investments. But if she doesn't need that money this year, which she doesn't in this case, well, guess what? The beautiful things is we're going to take the money from the crops, we're going to buy more land with it. So next year, instead of having $150,000, well, it's probably closer to $165,000 because of the compounding nature. And the year after that, it's even higher. And so we're moving forward, and the longer she can go with that compounding, that's why we say to give us, you should be starting to change your model and your strategy between 10 to 5 years before retirement, because it gives time for the money to build up to be able to actually stay ahead of what you would have even made if the stock market was good. So what we're talking about today is, can I still retire? And yes, you can still retire, but you have to change how you do things. And what we're talking about is lowering your risk, and in this market, increasing your return. Right, Daniel?
Right. If you've done a good job of saving, I think when you say yes, if you've done a good job of saving, and you still have retirement, even if they're down the 20 to 30% that markets are, if you've done a good job of saving, but you switch the models, then that's when you are able to retire. Because you can, historically, when we have a real recession, markets need to correct about 50% in order for them to recycle and start a new upturn, right?
Yeah, right.
Get the junk out of there, start over. This is healthy. This isn't unexpected. This happens about every 10 to 15 years, right?
Right.
We go through these things. The difficulty is this one lasted longer, and I don't think people thought it would ever end. Right. The Fed has my back. The Fed is my friend. All these kinds of things that have been going on. But if you've done that, you can still switch to this income model. And the difference is it's more certain to get back to where you were. So people say, well, I'm already down 15%. I'm already down 20%. I can't switch models because I won't get back. Well, the problem is the NASDAQ could still have another 20% drop.
Yep.
And that's a lot harder to come back from, because you don't have to go up. If it comes down 50%, you don't have to go up 50% to get back to even.
Right.
What do you have to go back up to get back to even?
Right. You got to go to 100.
And
it comes down 50%, you got to go up 100%.
So if you are able to protect your retirement,
yeah,
and while other people are coming down, you're either collecting income or you're staying at the same place.
Beautiful thing.
While they are getting their 100% to get back to even.
Yeah.
Right. You're protected. Or if you're down 30% and you make the decision while they're getting their 100% back up, you've just been collecting, pennies from heaven. You've just been collecting that money just coming into your account.
Right. It's a beautiful thing. It's a beautiful thing what can happen with that. Well, you're listening to Financial Strategies with Andrew Daniel Adjemi. Today's topic is, can I still retire? And what we're doing today is trying to educate you that there are ways to invest your money to where you can still retire if you are using those ways. We're not as much promoting ourselves to help you with that as trying to educate you. That's why we are giving away the paper today, which is how to know a true retirement income specialist. Because with this paper, you'll be able to understand if your financial person is helping you the way that you need, or how to interview and find somebody that can help you with that. So we're not pushing Adjemi Financial Strategies. We're not pushing Retirement Income Store as much as we're trying to educate you that there's a better way of setting up your retirement income. and retirement savings than what most people do and what Wall Street tells you to do. So you can have that paper, 10 signs, just ask for it by name, 10 signs by calling 800-725-7616, 800-725-7616. You listen to Financial Strategies with Andrew Daniel Adjemi, because people don't know what people don't know. Daniel, that all that stuff, that Siegel's paradox, as they call it, right? Where the market comes down 50% and you have to go, the market has to go up 100% just to break even. And people don't get that. And right now, the market, the S&P is down 20%. Right now, just to break even, it's got to do something like 30%, 25, 30%, just to get back to where it was in January, right? And, the further down it goes, the more you need. In 2008, when the market went down 60%, you had to do something like 130% just to break even on it. But like you say, Daniel, if you can, there's things that go, when the market comes down, they don't go down. They go up when the market goes up, but when the market comes down, they stay. And that's a beautiful thing, because it's like making money. If you don't lose anything, it's like making money. And then you can use that money to do different things and buy more land with and get more crops and all kinds of things, right?
Absolutely. Taking advantage of those situations. And in a more certain way, right? If we just took an example of, you looked at, a corporate bond that's trading under par. So you're taking a $10,000 bond, right? They're going to buy it back from you in 2027 for $10,000. And you could buy it now for $7,500, right?
Wow.
So whatever you lock in that income stream at, say it's 6.5%. Well, what could happen is it could go from that 7,500, it could just bounce right back up.
And you made 30% right off the get-go without your interest.
And then, right. And that's what we're talking about, different type, not one thing, right? You want 5 to 7,
right?
5 to 8 different streams of income, right?
Mm-hmm.
That work different in different environments and things like that.
Yeah.
And it's not just, I have Social Security, I'm all set, right? Different streams that do different in different times, so that you can, because we're talking about protecting your retirement, protecting your lifestyle. I think that's a better word than retirement, is lifestyle, because you stop trading your time for money, right?
Yep.
You stop trading your time for money, and you just start using your money to enjoy the things, the lifestyle that you want to have. And now your time is yours, instead of working so that you can hopefully one day, not have to go to work. Right.
Right. Yeah. That's good stuff. Well, if you just picked up listening to us, you're listening to Financial Strategies with Andrew and Daniel Adjemi. Today's topic is, can I still retire? People have lost a lot of money in the stock market, but doesn't look like the bleeding is done yet, that it's going to bleed out some more unless you make some changes. Make those changes you can. Well, we want to be able to educate you to be able to make smart decisions. So we have a book that we'd like to give you before we go to break here today. It's called The Retirement Income Story Book by David Scranton. It's got a lot of alphabet soup after his name, but we got about 200 pages in here that will give you a lot of information, education, in a way that you can receive without it being financial ease, so that you can know what you don't know. We'd love to put this book in your hand, free, no obligation. 800-725-7616, 800-725-7616. And we'll be right back after this.
I'm David Scranton, founder of the Retirement Income Store. If you're in or near retirement, are you certain you have the right retirement plan in place? Do you want to help ensure your nest egg will last you all throughout retirement? Take our retirement review quiz and find out in 5 minutes or less if you're doing everything you can to achieve a more successful retirement.
Visit us online at Adjemi.com. That's AGEMY.com. Welcome back to Financial Strategies with Andrew Adjemi in Connecticut and Daniel Adjemi in Colorado.
Yeah, do you remember a little while ago where trucks were just outrageously expensive, right? They're on the market, they're on the lot, nobody had anybody. They pay almost anything to get your truck. So my brother took advantage of that situation. The dealer offered him a ton of money for his truck. And he kind of saw the writing on the wall of there's these problems going on across, the world. Looks like World War III-ish is about to happen. And we have a huge energy problem. So he took advantage of that, sold his truck, and got a hybrid. Now gas out here is, $5.25, $5.30 a gallon. And they're thrilled to death because nobody wants the truck that they just dumped off. And they got enough money for the truck to buy a hybrid. Nice. So they're driving all around the mountains. They're driving around, exploring, and not having to spend a lot of money on gas.
Right.
But on the other side, I see people who have, they go to the grocery store and it costs them $3 for an apple, or they're not going out to the mountains because it costs, $160 to fill their vehicle up.
Yeah.
And the consumer sentiment right now is the worst that it has been since they started measuring it in the 50s.
Wow.
I'm Daniel Adjemi.
And I'm Andrew Adjemi. You're listening to Financial Strategies with Andrew and Daniel Adjemi, because people don't know what people don't know. And this is about educating you so that you too can be stress-free. Today's topic is, can I still retire? A lot of people are looking at retirement. They're looking at the stock market, looking at their account balance, looking at prices, and wondering, can I retire? Can I retire next month when I want to retire? Can I retire next year? Can I retire in a couple of years, 3 years, 5 years? People are wondering, how can I retire? Will I be able to retire? And that's what we're answering and talking about today on Financial Strategies. Daniel, that is something where, gas prices are so high. I hear in California, a friend told me his wife's out there, gas is over $8 a gallon in California. And then, the thing here in Connecticut, diesel is like $6.50 a gallon. Our governor says, well, he lowered the tax on gas, but he didn't lower the gas on diesel because, trucks don't buy diesel in Connecticut. They pass through and buy it either in the other states on the other side of us. But what about all those people in Connecticut that own diesel trucks and all the workers, the landscapers that I know with diesel trucks and that kind of stuff? Crazy, right? Just across the board. Consumer confidence is low. And when consumer confidence is low, people's view toward their retirement is low. And of course, especially when the market is going down. And it continues to go down, right? Yeah, sure, it might pop up a little bit here, but it's not going back up to the top. It's not going back to where it was in January anytime soon. And so people need to make a change. And that old rhetoric of, you're in it for a long haul, that's antiquated. That is a thing of the past, because if you're in your 50s or 60s or 70s, guess what? You don't have a long haul in front of you. So,
I think Jay Powell's made it very clear, and we should pay attention to what he says. The biggest reason why consumer sentiment is at all-time low, basically, the University of Michigan, right, has looked at this since 52, and it's the lowest number since then.
Wow.
And the reasons for that is because of food and energy, especially energy.
Yeah.
There's a problem with energy. We got this war going on. We stopped investing in energy. And you're talking about California gas prices being $8 a gallon. That's cheap compared to Europe.
Oh, wow. Yeah.
Europe is in this huge bind. And so Powell is trying to fix this inflation problem. And Biden, our president, keeps pointing at him and saying, hey, Jay Powell's going to fix this. Jay Powell's going to fix this. He's the guy that can fix inflation, right? And he can't print apples, right? He can't print food, and he can't print oil. He can't print gasoline. He can't print energy.
Right.
What can he do?
Print dollars.
He can crush demand, right?
Yeah,
and how is he going to crush demand? Well, he's going to make people feel poor, right? If you raise rates And now your house went from a 3% to buy a house to a 6%. People can't afford that. That's going to bring housing down. If it brings housing down, people are going to feel like they have less money. Your house used to be worth $600,000. Now maybe it's worth, 400. You've already taken the equity out. It blows my mind how much people have taken equity out of the houses to support their lifestyle.
Right.
They've gone on vacation. They took money out of the house and they went on vacation. They did this and they did this.
Yeah.
So people have taken loans against their retirement accounts or their assets, their savings, their stock portfolios to pay for their kids' educations or to pay for their kids' vacations. It's crazy what has gone on. So he's telling us, the president's saying he's going to fix it, right? Jay Powell's going to fix this. And Jay Powell is saying, we're going to break the back of inflation. And he's going to bring prices down by making the demand for it to go down. So because he can't print oil, he can't fix the supply problem.
Yeah.
The government can.
Right.
But they're not doing anything about it, at least not until elections come along.
Right.
But he doesn't have a lot of tools. So what he's going to do is he's going to bring assets down so people stop spending so much money. He's going to bring housing down so people don't feel like they have that much money. And a recession will fix this. Now, will we have a soft landing? It's looking less and less like it all the time. But this is things that people need to pay attention to, because you can have confidence in your retirement when you're set up the right way. But you got to pay attention to what's going on.
Right. That's exactly right. And you need the right tools in your toolbox. Today, you're listening to Financial Strategies with Andrew and Daniel Adjemi. The topic is, can I still retire? We put together a paper that might be of interest to you called Market Math Made Simple, to be able to understand valuations and how valuations work on the market. Instead of just putting money into the market, we'll call it stupid money into the market, because you don't understand what the market is, and it's more like gambling than anything. This market math will help you be able to understand valuations, be able to help you understand things in a simplified fashion. You can have that by calling 800-725-7616. Just ask for it by name, Market Math. And you're listening to Financial Strategies with Andrew and Daniel Adjemi. And we've been talking today about, can I still retire? And what we've been talking about is yes, you can. The short answer is you can retire, but you have to be careful, and you have to have your money set up in the proper strategy. That, there's two kinds of strategies. One is a growth strategy, that as long as the market's going up, you're making money. But if the market's going down or sideways, guess what? You're not making anything. The other one is a distribution and income strategy. You can still make money the old-fashioned way through dividends and interest. And whether the market's going up, the market's going down, you're still receiving money that can be used for your lifestyle. Daniel, this is a very important part that we're trying to bring across to people. I wanted to make sure that we're effectively communicating to our listening audience for what they need to know. What have we left out, or what can we add to what we've said so far as we wrap up the show today?
Well, I think that, people have been talking about concerns with inflation, concerns with what's going on, right? For losing jobs all over the place. These big tech companies have sold off. People didn't think that they could ever go down. And people kind of got caught up in this sentiment that things will only go up. And that's fine when you have a good job that you're not going to lose during a recession and you're earning income, because you're able to take that income and you're able to invest lower. So if you're young and you're working and you're not looking at retiring, we'll start building up cash reserves, because there's going to be opportunities for you to buy businesses, to buy land, to buy houses, to buy stocks, to buy all kinds of stuff.
Right.
If you are serious about retirement, you need to start looking at, is my portfolio generating enough income that I can ride through whatever comes next?
Yeah.
Is my portfolio, am I invested for hope, right? If you got a piece of paper there, you write down this equation, right? Capital T, capital R equals capital I plus capital G. And what that means is there's two ways of earning money, right? Total return is made up of two things. It's made up of income and it's made up of growth. And the problem is when you're in an environment like we are right now, where the Federal Reserve especially is saying, hey, we have to fix this inflation problem, but they don't have the right tools because policy errors have been made, right? Government errors have been made. And that's why we're in this situation we're in.
Right.
All they have a blunt tool, and that's to raise rates, which is going to affect the value of your house, which is going to hurt, especially if you've taken a lot of the equity out of the house. It's going to hurt stock portfolios. It's going to hurt retirement portfolios. Mm-hmm. But there is a way that you're able to protect yourself and make it through that. And that's by getting productive assets, just like we talked about the land, right? The farmer having productive assets, having crops that are growing and providing income. You want your retirement portfolio to have productive assets in that pay you. Because if it doesn't pay you, it's speculation. It's just hope-based, right? That's the G, and it can turn into an L. But if it pays you, if it's a productive asset, then you're able to have the confidence that you need to be able to enjoy your retirement, even when we are in strenuous times like right now.
Right. And you can have confidence that you can retire. Another thing, when you're talking about those, to be able to have the right resources. Well, two things come to my mind, Daniel. One is, the buying chickens, because chickens lay eggs, and eggs are a renewable resource as opposed to buying roosters with your money. Because if you buy roosters and you need to eat in retirement, you're going to eat up your roosters. But if you have chickens that are producing eggs in retirement, you eat the eggs, you're going to have what you need, right? The other thing that comes to my mind is, folks in our listening audience, the people that you're working with, or you, if you're doing your own investments, you need the right tools to do the job, right? The analogy that I've used in the past is that of, if you have a leak in your house, do you call the plumber or do you call the carpenter? Well, the carpenter could maybe fix the leak, right? But the plumber is going to do a better, quicker job because he's got the right tools. So when you're looking at retirement and how to retire, make sure you have a retirement specialist who has the right tools in his toolbox. And if you're your own retirement planner and advisor, that's fine, but make sure you learn and you take years of study. And then once that study happens, then you take years of actually putting it into place to be able to have real world knowledge, because textbook knowledge is different than real world knowledge. So if you want to invest all that time into that, go to it, man, but just make sure you understand the right things so that you too can retire and you too can have stress-free life. Well, listen, as we close up today, I'd like to give you away this book, this Retirement Income Storybook, for the next 5 callers at 800-725-7616, 800-725-7616. The Retirement Income Storybook will give you thoughts, ideas, and education so you too can have a stress-free retirement. Call now,